Not audible.
Okay. Uh, Good afternoon, everyone. This is Amol Dete, the editor of etbfsi.com. I'm so sorry because of some network gap. Maybe you could not hear me, but I hope all of you are able to hear me now. Thank you so much for being part of ETBFSI conversation, specifically in the special episode of FinTech Diary. Thank you for being a part on this occasion as we are celebrating Diwali. Happy Diwali to all of you. In my conversation with the fintechs in last couple of weeks, what I have realized is an interesting trend where specifically the fintechs have started talking a lot about regulation, which they earlier used to speak more on the innovation side. And that's why I thought, let's talk about whether regulation or innovation is more important, what is more important, how to maintain a balance, and how to actually take away this dilemma of the fintechs, because fintechs are telling me that they're in a dilemma. So, friends, let me begin by introducing you to the panelists that I have with me. My first panelist here is Bhavin Patel from the Indian Club. It's a regulated entity, operates in the peer-to-peer lending space. Bhavin, glad to have you. My next speaker is Miss Shalini Chakraborty. She's from PhonePe, a compliance and ethic officer there. Shalini, glad to have you.
Thanks, Amol, and good afternoon, everyone.
My next speaker is Mr. Jatinder Handu from Digital Lenders Association of India. Jatinder, glad to have you.
Thanks so much. Good afternoon, Amol, and to all your viewers, and thanks for having me here. Thank you.
And my next speaker is Mr. Rishi Agrawal from RegTech Team Leads RegTech Private Limited. Rishi, glad to have you.
Thank you, Amol. Pleasure to be here.
Thank you. So, Shalini and the gentleman there, my basic or the quick question to all of you is, what is the current situation? Do you see fintechs are in a dilemma? Do you see they are going through a major challenge of their life in terms of whether to look at regulation or whether to look at innovation? What is the current situation? Is my basically the first question to all of you, and I will start with you, Jatinder.
No, thank you so much. And you know, uh, let's look at it this way. Regulation has been an integral part of financial services since financial services have come into. When we talk about formal financial services, fintechs have been more active. And if you look at, I mean, I'll go a bit back, 2015-16, when all this movement of fintech started in India, and it was actually accelerated during the COVID period. Now, fintech has matured in India. There is a level of maturity. There is a kind of streamlining happening now. And now, regulator is also looking at putting up some guardrails which already have, there are, be it fintech SRO, or be it in terms of digital lending guidelines in place. And for last 8 to 10 months, there are changes which are taking place, which are we'll say, this is, of course, for a few, this is a painful, little painful process, but this is a phase. And as I have mentioned earlier, this is a mature industry now. And one has to, because we live in a world which is kind of a at least in India we say a regulated environment, formal financial system, and then there are concerns which regulator has regarding, protection of consumer interests. So I think from that perspective, it is important. And to answer your question, I would slightly differ in saying that there is a it's like some big existential question, or question of their life. No, I think this is something which many of them have already adopted. Wherever a small fine tuning is required, industry associations and consensus based coalitions come together and they streamline it, and we have a guidance of RBI on this. Thank you. I'll pause here.
Okay, sure. We'll press the pause button in some time, Jatinder, and come back to you. But let me go to the other panelists as well. Bhavin, let me shoot the same question to you. Are the fintechs in dilemma, innovation, or regulation? What's your view?
Yeah, absolutely. I would agree with to that point. Whether we accept or not, that dilemma is definitely there, and there are reasons behind it. Possibly, it's because so far, fintechs over last 8 to 10 years were running on a very good express highway. So whatever they were finding as a part of their innovation in the journey, they were doing it. However, as and when regulator understood that possibly this can lead to some kind of issues, I think they have become active member of the ecosystem, studied it, and based on their vision of each and every industry, whether it is payment, lending, or P2P, they started advising and taking their actions, whether it is required in terms of regulatory changes or in terms of formal guidance. So yes, dilemma is definitely there. Whether it is here to stay, I would say next 6 12 months, yes, definitely it will still remain there, because it's a transformation in the life of fintechs, the way they used to think and execute. I would say 3 years back, if some idea comes in, people would just start execution. Now, today, if fintech comes up with any product idea or customer flow ideas, they take a pause. They try to see from the lenses of regulator, and then take up the development or the take up the product to the customers. So yes, definitely dilemma is there. It is going to stay for another 6 12 months before things get streamlined.
Okay, that's a very important point, Bhavin. So basically, we have to see at the fact that now the fintechs are not looking at only innovation, which they used to do a couple of years back. Maybe they will sit in a boardroom and have a liters of coffee and just try to innovate something. Now they are looking at, okay, where are the RBI guidelines first, and let me innovate accordingly. Is that as what started happening,
So
Bhavin?
yes, I would say so that so far probably it was little bit of more dreamy thing, that one fine day morning you come up with an idea, product guy will define the product, tech guy will develop that, and next day it gets launched. That wasn't bad as well, because so far whatever innovation has come up, and some really good products have come out, but possibly that time has changed, and the
Right.
way fintechs used to think, that has to be changed. I'm not saying it is bad or good, possibly time will only tell that, but that route has changed. सो जब आप एकदम से एक एक्सप्रेस हाईवे के ऊपर जा रहे हो और लोनावाला में एक टर्न ले लिया, एंड फिर स्टेट हाईवे आ जाता है, तो सडनली यू फील कि अरे यार, इतनी बड़ी सड़क से एकदम छोटी सड़क पे आ गया, अब तो ये लेफ्ट में भी देखना पड़ रहा है, राइट में भी देखना पड़ रहा है, गड्ढा भी आ गया, एकदम से स्पीड ब्रेकर भी आ गया. तो दैट इज द एक्चुअल डायलेमा. अब जैसे चीजें ठीक होती जाएगी, आई थिंक दोनों के बीच में एक विजन की सिमिलरिटी बैठना चालू हो जाएगी, रेगुलेटेड एंटिटीज एज वेल एज रेगुलेटर्स के बीच में, तो वापस से वो एक्सप्रेस हाईवे पे हम पहुंचेंगे. ये थोड़ा डिटूर है, आई थिंक.
No, certainly, like that hope, Bhavin. I would also like to tell viewers that you can shoot your questions to any panelist that you want to ask. Please be open up, and any question that you have related to regulation, innovation, please go ahead and shoot that question. I will try my best to take it. So moving ahead from Jatinder and Bhavin, let me come to you, Shalini. You may slightly have a different view because you come from a compliance background. So you must be looking at the regulator far more seriously than a CEO or a product head or a CTO, right? So what is your view now?
So, the fintechs have played a very important role if you look at today's financial journey of a customer. And I'm looking purely from that angle, not, looking at from a regulation or an innovation purely. What we are trying to do is trying to make the journey of any individual living in India, providing some seamless solution, some easy solution, these are some complicated products, and we provided through fintechs a lot more simpler way of managing, their lives, managing their investments, all of that kind of a thing. So if you really look at that, I think it's an appropriate way to make sure that the customers and stakeholders' interests are also safeguarded along the journey that we have had. But at any point in time, like Bhavin said, it is not that there is, a speed breaker or it is getting stopped. I always look at it, the funding in the fintech sector, to me, it looks really very, very bright. I think even if you look at the last, couple of months stats, there's always a change, from a later stage to an early stage. So there are those statistics that keeps changing, but the funding has always been regular and it looks very bright to me. In fact, what I personally feel that it has actually grown beyond like just the payment space, the lending space. It has even gone up to cover up some areas that have not been spoken a lot more in the past, like a reg tech or an insure tech, those kind of areas that has also been covered by, fintechs nowadays. So it looks very, very bright to me. Obviously, we just have to try to balance the customer and the stakeholders' interest as well.
Okay, sure. And Rishi, your views, as Shalini already, shot a question to you, adding RegTech and InsurTech, into the space. So since you are operating in RegTech space, please go ahead and share your views, your opinion
Sure,
on it.
Amol. Thank you for having me on the show today. Amol, I feel that regulations and growth are not mutually exclusive. One cannot happen without the other. It's like you're trying to drive a car successfully on a highway without having both the accelerator and the brake pedal in the car. If there is no brake, one is bound to lose control and meet with an accident. And I'm sure we all want to avoid these accidents. Fintechs have attracted a lot of attention and capital in the recent years. Many disruptive fintechs have emerged in a short period of time. They've become large and systemically important. I'm sure all of us appreciate that in any financial system to work well, all the participants, including the lenders, the borrowers, the intermediaries, the government, they can trust the system. Anytime when a trust is compromised, we see that it alienates the participants, including the depositors and investors. We have seen many run ins on the financial institutions, precipitating bankruptcies in the past, a couple of incidents in the Silicon Valley being the case in point. So I'm glad that we are finally starting to recognize that in the fintech car, we have the brake as well as the accelerator pedal, and we need the people in the industry and ecosystem to use both diligently and efficiently.
Sure, Rishi. I think that's again a great example, starting from what Bhavin said about express highway. You added a brake and accelerator both. So I think while industry at large agrees to the fact that maybe we'll need clutch, brake, accelerator, whole the ABC model in the fintech space, but then the immediate question that we have is the innovation at the large level, which the fintech has brought into the ecosystem, did not happen for years, and it happened only because of they got a free runway. But now, if the regulators have a lot of factors inbuilt and which fintechs should adopt before innovation, the question is, will innovation take a back seat and regulation take a front seat? Is the basic question that I have. And Jatinder, I would like you to tell us, how specifically the digital lenders are looking at the recent innovations that recent regulations which the RBI has come up with specifically on those four NBFCs or the four fintech operating in a lending space, because RBI has come with specific findings and asked them, in fact, to go slow in terms of lending. So how is going to be that impact on the industry, Jatinder?
Thanks so much. And first of all, let me clarify. This is probably a slightly, we are misunderstood as Lenders Association. Although name is there, we are a FinTech association with a diversified membership. So first, I would like to clarify that. Of
Sure.
course, lenders form a significant portion of FinTech industry per se. So they are our members. After although I would refrain myself commenting upon a specific entity out of those four, but in general, let me tell you, after and this has been a continuation for last 8 to 12 months. There are different changes taking place. We saw it beginning in 2023, right from There were modifications in the master direction of KYC, master directions. Then came, multiple other, new developments, including risk weights, and then SRO, and then, multiple developments have taken place. Now, coming to the specific point of these four institutions which you mentioned, first we did a kind of a review of literature of RBI actions, and you will be, I am not sure if you were aware of this, but it was a revelation to me. At least, there are around, for last, since April 2024, more than 150 regulatory actions have been taken place against different banks, and most of them are cooperative banks. When we go to non-banks, there are roughly 54 such actions have been taken. They are taken against non-banks, and both of them are probably the monetary penalties. As far as non-monetary penalties are concerned, since April 24, roughly around 14 or 15, non-monetary penalties, or these kind of breaks have been, put up on hold. So let us see this development in this broader context. So that is part one. Part two, yes, as I told, earlier in my previous, when I shared my first in the first round, we live in a country where we have a very benevolent regulator. Being a regulated entity, as Rishi kind of alluded, it also brings, legitimacy, trust, reputation. But then also there is a responsibility. That's part B. Part C is, this is also true that many fintech companies today are little puzzled, I would say. And but that is not primarily because of, regulatory action, but there are multiple aspects related to that, including, the multiple changes which have taken place over last 8 to 12 months. And I can also, share with you, a way forward for that, the approach which we are adopting for our members and the fraternity of fintech firms in India. So I think what is important, although RBI has a, robust consultative mechanism with fintech companies, at least for last 8 to 10 months, we have seen there are fintraction. There are multiple, opportunities to interact with at least fintech department and other departments of RBI, and we are thankful to them. Now, but questions, sensitive questions like, pricing of credit, conduct of business, customer protection. I think there is a still ample room to sit across the table and communicate and kind of, share the service providers side with the regulatory agencies, and they are quite open to that. I think
Okay.
that is the need, and that's what we have kind of also identified. So, be it on a pricing side or, conduct of business side, which also includes customer protection. And to be very specific, I think on pricing side we saw some comments, and also if we step back and look how this entire fintech industry emerged. So
Right.
basically, most of this emerged as a tech fin. Initially they were technology companies. They ventured into, financial services, and then, on the way, it was a fintech
Sure.
revolution in the country. And the kind of role which one of the speakers kind of alluded, the kind of stellar role which fintech has played in this country for, deepening and widening of financial inclusion is great, although their percentage is still small right now. So, summing it up, what I have communicated through this message is, the kind of the more elaborate discussions on sensitive issues between service providers through industry associations like DLAI, and, with the regulator and other agencies. And probably we are engaging with our members on this, and shortly,
Okay.
such communications will be, we'll communicate it to RBI sentiment of a sector. So I think these communications are much more required, but per se regulations are important, guardrails are important.
So I copy you, Jatinder, and nobody disagrees with the fact that the fintechs have brought a greater innovation. Perhaps the level of financial inclusion which we have achieved would not have been achieved without the fintechs coming to the picture. But I would still like you to maybe take a minute and decode the allegations which the regulator had put very, very strongly. Obviously, the one side of story is that the fintechs are catering to the credit hungry people, or the segment of people where banks could not have reached. But the allegations or the words, like you said, pricing of credit, and adding to that what regulator said is specifically unfair and usurious practices, which the regulator has been talking about. So does that mean that the fintechs operating in lending space also use arbitrage, also used loopholes, and perhaps that regulator is not happy with? If that is true, then what could be the next course of action do you see specifically in this direction, Jatinder?
Look, one regulator has a broader access to information and data and market intelligence, which you and I may not be privy to. So that's part one. Now, part two is, as I said, everyone agrees the stellar role of fintechs which they have played, and especially the lending side of it. On pricing side, I am not very convinced, or I am not very sure if regulator wants to put some, even in microfinance, if you see, the pricing was capped for many years, and then I think 2022, 23, the pricing caps were removed, and the boards were given that authority to decide the pricing part of thing. There is also another formula which great leaders like Muhammad Yunus gave, green zone, amber zone, yellow zone of pricing, cost plus margins kind of a thing. So all those formulas are there. Coming again to pricing, I think we also need to understand that access to capital for consumer credit in this country is costly. For at least for business finance, you have access to subsidized rates or relatively lower rates through institutions like Mudra, Sidbi, or some of that also comes through priority sector lending. But for consumer finance, which contributes to roughly 66% to the GDP of a country in terms of household consumption expenses, I think no one kind of provides a low cost credit to these lenders for that. So there is a price of capital. That's part A. That's what I am saying. And then if you look at the reduced pricing rate, the pricing becomes a different. That's what I said. Probably there's a more need to have an elaborate, at length discussions and mutual learning sessions with specific departments or specific right kind of people, to make sure that the concerns, if at all any industry player has, they are understood. And that's what I referred earlier, a consultation process is on the way.
Sure.
We are not averse to, or industry is not averse to regulations. Of course they are following regulations, but I think these nuances, they need to be understood, and they need to be uh, put up into the policy making, with the voice of a sector.
Sure, sure. That helps, Jatinder. Bhavin, let me come to you. P2P lending was one of the important model that RBI brought into the picture a couple of years back, along with maybe during a time of payment banks and even SFBs. It was a different model, and everyone was kind of bullish on this particular model. But what went wrong? And after the RBI's regulation now, what kind of changes do you see specifically in a P2P lending space? Do you think that you will grow with the same numbers that you had earlier? Do you think that the picture will be the same for you and other P2P lending companies going ahead?
So I think nothing has changed materially. So Amol, if you go through what regulators said in their consultation paper in May 2016, what they came up as a first master direction in 2017 October, and what they have reiterated again in August 2024, there is no huge change in terms of the vision they had for the industry and the way they wanted industry to govern the operations. What changed in between? There was a sizable times was gone away between 2017 to 2024, and we all know that fintechs are here to push the boundaries and build new solutions. So if there is a longer period in between the revisions of the regulation or re-looking at the industry, more and more innovation solutions will come, because we get market forces to tell us what kind of solutions are sought by the customers, and companies will keep building it. However, as and when regulator sees that certain kind of changes are not acceptable, or those are not going with the long-term building of the industry, it will shaken up the base of the building itself. They will come up and change certain points. So that is where regulator elaborated the regulations which they first announced in 2017. The August 2024 change is just mere elaboration of the points which were already covered. There are only two additional things which they have spoken about. One is T plus one, and another is no transactions between lender to lender. Apart from that, everything else remains same with some more explanation so that people as well as the industry understands it. So I do not see that there is a huge change. I do not agree with the point of view that something has something wrong has happened to the industry. I would say it was a normal course of action that 6 years are given to the industry or for innovation, new things will come up. I think it's a course correction. Another 6 to 12 months, things will go in a right direction. As far as we as a company is concerned, we are back to around 60-70% of our transaction volume, which we were clocking in July 2024. And I'm sure that other P2P platforms will also follow the similar kind of course correction action, and you will see some real good solutions coming up in the market. Second thing, which is much more important, that if we look at the global P2P market, there are only two very big markets. One is UK and another is US, where we have seen P2P lending companies flourishing, and there the practices which are going on at the P2P lending platform are quite similar to the vision which regulator has. So I do not see that regulator has taken an action which will kill the market or something very wrong has happened. Both the things were happening in parallel because the fintech reads and understands and interprets the regulations in their own way. Regulator has their own way of drafting the regulations and creating vision. Now I think both are coming together, and the mocktail which will be made out of this joint vision will really be very tasty, and people will get benefit out of that.
Hmm. Sure, noted your points, Bhavin. So you're saying that you're almost back on the express highway.
So I would say, see, that's why I mentioned that we just took a detour on Lonavala. If people knows about the geography and roads, so Lonavala से थोड़ा नीचे उतरे, आगे जाके वापस एक्सप्रेस हाईवे पे तो जाना ही है. And it is the regulator who has to guide the industry, and they are doing it. As Jatinder also mentioned, and I am sure whoever operates in fintech industry, especially lending, whether P2P or digital lending, they know the kind of efforts put up by regulator as well. See, sometimes in my industry also people say that you are talking from the regulator's angle, but I say there are both angles. We can never just push one angle, whether we like it or not. Regulator is there to create the market, right? They have to see the long-term vision, and industry player has to align their vision along with the regulator's vision. So if I talk about last couple of years of regulators action, they have built up the team. Earlier they did not have bandwidth to reach out to the people. Today, even to a small fintech company, they go visit, understand the operations, and guide them. They are giving formal guidance. They are working on so many regulations. Jatinder already counted the kind of regulations have been formed in last 3-4 years. So all those requires efforts and dedicated looking at that particular aspect of the regulations. Uh, Sometimes we may not like it because किसी को भी अच्छा नहीं लगता है गड्ढे वाले रोड पे जाना, but I think that's the way things will evolve in next 1-2 years time period.
Okay, okay. Uh, Shalini, has compliance now become like a routine or a regular part of the fintechs, which was not perhaps, the case earlier? Perhaps even fintechs, when they started their products, innovation or business, they may not have even a desk for somebody sitting, at a compliance level. But now you could see a cabin or maybe a conference room specifically dedicated to a people or a team of compliance. Is what happening now, Shalini?
So, compliance is a very integral part when it comes to financial services. Of course, fintechs, have come up, and of course, there's banks and cooperative banks and other financial institutions which have always been very highly governed by the regulators, respectively, for the area of financial services that they have been providing. Two things here. I think I know we've spoken very specifically about the lending, aspect from a regulation when it is coming to. But there has been a lot of progressive development, is what I would say, that's been happening when it comes to regulatory, landscape that is changing in India. It is, obviously regulator with specific to specific product that we are in. But if you look at, India never had a comprehensive data protection act. We have gotten now like a digital personal data protection act, which is the first comprehensive data journey that has been regulated now, starting from collection to processing to storage. There's been, a lot of anti-money laundering tightening that has happened, and it is just benefiting India as a country, as well as benefiting the entire ecosystem, the fintechs overall. I mean, I don't know how many people are actually aware of, but we have been moved a level up in the FATF, mutual assessment that got concluded early this year. Actually, the final report came in earlier this year. So there have been SRO. I think Rishi spoke about, or Jiten spoke about the SRO that has been, which is a bridge between the regulator and the members who are part of the SRO. So all of these mandates are coming. So regulator is also today trying to make it easy so that there are early warning signals that can be detected. That's job of the SRO primarily. Looking at, we are able to create a very transparent financial system, and ultimately, if we are able to give that, to the entire world, it's going to help us in terms of getting more funding, new technologies, a lot of data sharing, and a lot of sharing that would happen across the globe. Coming to the specific question, Amol, there in terms of whether the compliance has a seat on a table now, at PhonePe, we have always worked very proactively. I've been here with the company for the last 4 years, and we have always had that seat at the table. So our approach has always been, a building a very robust compliance culture. We have a very good tone from the top, and very proactive way of having compliance being involved. Starting from the product journey that a tech organization generally has. So this is something, that has always been there. Coming to, some of the maybe startups, maybe smaller fintechs that have been the play around, it is very important that they set up the tone right. I'm not saying that they need to have like a very large compliance team. It has to be balanced with the stage of the organization, the growth that they are having, but they can't be overlooking compliance. Is, I think that's one of the very important and most important aspect in today's world, and specifically when you are operating in a highly regulated um, uh, environment from that perspective. So this cannot be something, coming in later just because you have an audit and inspection to manage, or you have a regulatory reporting requirement. So that's not the job of the compliance. That's never been, in my personal opinion, where I've worked even before PhonePe as well. It's always that we work in a partnership model with the business, the products team, the tech teams, just to make sure that we have the right regulatory requirements built in while we are building the product. We have the right controls while we are, still deciding the design of the product, while we also ensure that we are not killing the creativity, we are not making it difficult for the customer as they come onto our app. But I don't know about others, but for us, it has always been a very, very proactive way of looking at the compliance. So we always had the seat, when it came to compliance. Of course, and the tone, the culture has always been there in the organization.
Hmm. Sure, Shalini. So Rishi, let me come back to you now. Again, you're a fintech in a different manner altogether, and you're dealing with the fintechs and NBFCs at a large number. What is it that you see now? What was actually missing? Specifically when the NBFCs or fintechs, like Jatinder gave a number of companies that were penalized or charged by RBI. In fact, number of obviously cooperative banks are more. But even if you look at NBFCs, every month there are at least 6 to 7 NBFCs being charged. What is actually going wrong? Because these are the common mistakes which most of the companies are doing. So, is it in your observation that the NBFCs or fintechs did it purposely, or they did it because they thought they don't know about it, or they thought that they will get away with it? What do you think was actually the finding of all these challenges that you saw?
So, Amol, it's a great question. We actually work with a large number of NBFCs, helping them stay on the right side of the law. I'm not sure if many of the audience who are watching this program today realize that on 31st of January this year, earlier this year, RBI mandated use of technology-based systems in order to manage compliances, and that was applicable to a large array of NBFCs or regulated entities, if you will. But before I answer this specific question, I do want to give an adage. I'm sure most of the people in legal fraternity already know about it. Ignorance of a law is not an excuse for non-compliance. So if somebody thinks they can ignore the law by, if they are not aware of the law and it is an excuse for non-compliance, please think again. So that's the first thing. Second, I think a number of people in the industry, they think an active regulator is bad for the industry. We often confuse activity with hostility, right? We have to all understand that we cannot promote innovation at any cost. Practices that fundamentally hurt the customer's interest have to be nipped in the bud. You asked what we have seen. You see, most of the regulatory actions taken by the regulator have come in response to a few things. Now, let me give you an abstract of those few things. First, predatory interest rates. We've seen a large number of areas where predatory interest rates were there. I don't think the industry players can deny it. Second, hostile and abusive recovery practices. I mean, the whole guidelines came in direction of recovery practices where a lot of hostility and abusiveness was entrenched in the recovery practices. Third, malpractices in the lending. Fourth, lack of KYC, and we saw one of the major fintech players was heavily penalized to the extent of losing their licenses for poor KYC, where more than one PAN is associated with an account, improper income assessments, neglect of borrowers' repayment capacities, poor grievance handling and grievance management systems, compliance with various technological standards and requirements on cybersecurity, unauthorized data collection and storing personal information on borrowers. Many tech companies were actually accessing people's mobile phones once their app was installed and reading all their text messages and drawing the contact information and sending messages to the contact information. Now, tell me one thing, which of these are reasons why the regulator should not crack down? Which ones of these we should condone because the industry players are innovating? Innovation at any cost is not the right innovation in my view, Amol. There has to be a brake as well as an accelerator in the car. We need to use both in order to avoid accidents on the road.
That was very, very relevant and realistic, Rishi. Thanks for adding that. So Jatinder, let me come back to you. There was, again, whether innovation or regulation is an important aspect that we are discussing, Jatinder. But now the question is, when the fintech will have to incorporate all those tick boxes which the regulator wants for obviously important reason, which is a customer safety and customer protection. What kinds of changes do you see will happen in fintechs? One, do you think that they might not get a lot of attraction from the investors? Do you think that the compliance cost will go up? And do you think that they will not showcase the same GMV numbers that they were showcasing till now? Because, everything will come under the scrutiny going ahead, and they will have to go through every transaction, quite carefully and meaningfully.
Sorry, thanks so much. I think this is a very pertinent question. But before I arrive that, let me also, share a little snippet on what Rishi alluded to, the kind of unauthorized data collection and having access to personal information. Yes, we have seen such cases in case
Mm,
of unauthorized lending apps,
mm,
and most of these operators were not even operating out of India. They were in different geographies, including Ministry of Home Affairs, I4C, even DLAI in partnership with NABARD. Did a small bit from our side in terms of fintech suraksha and other campaigns. So I think that is a recognizable issue. But let us also appreciate the fact that industry has matured, especially the players who are there in market right now, especially after digital lending guidelines, which were applicable to REs into fintech space, and then their LSPs, indirectly applicable to LSPs also on the lending side. I think there is a large level streamlining that has happened, and these instances, a few Chinese based, or I should not name other countries or different jurisdictions where these people are based, I think they tarnish the image of a well set industry. That's part A. So I just want to add this point to what Rishi alluded to. So the question two which you asked, after those tick boxes, how is going to be, and how investors are going to look at it, what's going to be the impact on compliance, cost of compliance, and numbers, and so on and so forth.
Mm.
As I already said, this is a mature industry now. And also, let us realize fintech is not uniform. It's not uniform like a microfinance. There's a diversity in fintech. You have lending techs, you have REs which are doing fintech lending and other fintech services. You have wealth tech services. Payments is a big side. Then there's a P2P, and there's a diversity of different players, and they are moving at different at a great at a at a staggered pace. These are moving, with payments and lending pieces moving at a faster pace. So the eye of a storm in whenever any action happens is usually in the eye of a storm are payments and lending service providers. So to put it in perspective, I think investors should be more happy, because when I joined State Bank of India, the
Mm.
first chapter, the first day during induction at SB, State Bank of India Academy at Hyderabad, we were told principle of safety of funds. So principle of safety of funds is the first, irrespective of whatever investment rate of return you are getting, your invest the funds which you are investing as an investor should be safe. So if there are regulatory guardrails, I think it will only appeal investors. That's part one. And these guardrails are not new. As I said, there are different, right from third party outsourcing, IT outsourcing, recovery agents for NBFCs, there are guidelines, and then digital lending guidelines. So they are incremental in nature, evolving over a period of time, and investors have seen it. Cost of compliance, as far as cost of compliance is concerned, I would agree with Shalini and other fellow panelists. I think compliance is an integral part in a financial ecosystem where when we are working in a formal financial ecosystem. To me, I think there are many studies which I have referred. Roughly, I think 3 to 4%, depending upon size of a company, is the cost of compliance. You have to have a compliance team, and then again, if you are a part of a larger ecosystem, or of a platform which fosters consensus based approach like that of a DLAI, you have access, or many other institutions like that, like DLAI, you have access to these resources, because as a startup, as a small company, you may not have access to those premier law firms or premium advisory services, which
Right.
being part of those platforms you can have access to and reduce your cost. That is only for startups, because startups, you are still growing, you are bootstrapped, you are trying to explore many things. And third is numbers. I think there's a fair level of transparency in numbers, because the sheer amount of investments, private investments, which fintech sector has been attracting. You probably know it, and all fellow panelists know it better. The kind of scrutiny which private
Yes.
investors do on numbers. So I think this is what I have to say on this. Thank you.
Sure. I think you spoke a lot about compliance and legal. I think Shalini also wants to add something. Shalini, please go ahead.
Yeah. I think this is just a mindset, that needs to change. Compliance is always looked at a cost function, obviously, because it does not generate a direct revenue for any organization. But what I would say that compliance is actually a function that creates a competitive advantage for you as an organization level. So when there are a lot of people trying to be into a similar kind of a business. Obviously there's innovation happening, but there's a lot of similar business also being offered by a lot of fintechs and maybe banks as well in today's scenario. So what is it that creating that niche space for you, in terms of, like Jatinder spoke about, there's going to be due diligence if you are in a space of raising money, or you're trying to invest more people, coming into, or even invest, having to have the right talent coming to your organization. I think those are some of the key challenges that every organization faces. So compliance really creates that competitive advantage. It creates that transparency. It creates that trust that the customer needs to have. Ultimately, what you're building is to get the customer onto your platform, right? That trust is a very important and integral element. I mean, somebody's trusting you with the money, hard-earned money that they are having in. And if they know that the organization has such a strong compliance function, and then creating that image for the organization outside, you can have more and more customers, right? So it's just the way of looking at it in terms of compliance, actually creating that sustainable growth in the long term for any organization. I just kind of wanted to add that. So our outlook of just looking at a compliance function as just a cost function is definitely, in my opinion, is not the right way to look at it.
Hmm. Certainly, I think I have received a couple of questions, but we partly, added them already because the questions were more on, what comes first, regulation or innovation. I think we broadly discussed that in a different angle. But I think one question is specifically on the DRDP Act. Once the Data Protection Comes Act, what kind of impact, there will be on the fintech side. Anyone wants to take it? Rishi, Bhavin, you want to add on that? Because obviously the fintechs are based on, the whole idea of data itself.
I can take a part of that question,
Go,
Amol.
right.
There are two
Go.
kinds of impact that will be there once the act becomes a law. The first
Hmm.
one clearly is the people side of the impact. Second is the technology side of the impact.
Okay.
Both are equally important. In
Hmm.
India, privacy always takes a backseat. When we handle someone's private data, we don't think there's anything big deal about it. The way we store it, the way we share it, the way we use it, the way we sometimes even go ahead and sell it.
Hmm.
The sensitivity surrounding how important it is to respect privacy in people needs cultivation and needs enhancement at a significant level. And as citizens, we have the same problem, and the citizens work in organizations where it become an institutional problem. So one clear change that I would like to see is this area where people's sensitivity when dealing with privacy confidentiality goes up dramatically. That's a problem. Second is technology. A lot of these tech systems were designed in the last 10 years, and many of them still do not have the right barriers between various departments and functions who need to have what they have only on the basis of need to have, and
Hmm.
anything more needs to be taken out. So a lot of tech systems have to be enhanced. The encryption algorithms that are there to deal with data at rest and data in motion may not be there. The front end which people are using, they need to have a lot of masking standards once the act becomes a law, where what information can be shown in full text and what needs to be masked, how much it has to be masked. If someone actually has to see that information, eye next to that, where they click on it and it becomes visible for a few seconds, only for the human eye for a few seconds to read it. All of these are tech changes that has to be made in our technology systems. And I was doing an assessment on our systems, and we've been talking about it for about 2 years now. And we realized that in a company like ours, there are at least 70 or 80 different screens in mobile and web where this kind of information becomes visible to different parts of the organization, and how this has to be managed, masked, encrypted, and so on and so forth. And that whole thing is something where the country overall, including citizens and organizations, are not fully geared up. So it will take a while before things become institutionalized. And I just wish it comes sooner than later so that the journey can start, the ball gets rolling, and we get moving faster on this than we have as a country so far.
So, if I
Certainly.
could sort of add a couple of points here as well, I think there was a survey that was conducted, and I was reading one of the reports. Only 17% of the people in India knew about this new act. So, that's
Yes.
the level of awareness that we have. So, the act is primarily based on, it's a very consent driven and notice driven act. That's what it is surely talking about. And what we see as one of the challenges is the historical rollover of the data into the new. So a lot of it, we have consent based on certain license obligations that, based on what business you are in, but it's not been very explicit everywhere. It has not been defined to be explicit in the first word. Now, the act is actually asking the consent to be more explicit. And then how you're going to be do the historical rollover with the customer who doesn't, who like Rishi covered it, right? People are not very sensitive about the personal data here. So when people don't know what my rights are and you're asking them to give the consent on it, I think those are going to be some of the challenges. Of course, we are waiting for the rules to come in for the implementation, and a lot more clarity would come in, some of these questions that are coming up. But yes, those are going to make an impact on any organization across. Actually, it's going to make an impact across. It's an industry agnostic in, from, if you really look at from that perspective. So it impacts everybody.
No,
Certainly.
can I add a
Sure,
piece on
sure,
this?
sure, sure.
So
Yes,
I
yes.
think this is an interesting conversation around data privacy and DPDP Act. Although on technology side, I am convinced and I'm confident that B2B level, this should not be a big challenge. It will
Okay.
be a challenge when we roll out this thing to the to out there in the rural India, in the Bharat, which we call, as Charlie mentioned, about 17% of the people probably are aware of this. It took us around 20 years after the global financial crisis to have some effect of, I'm not using the word impact, but some effect of efforts which have been taken by multiple stakeholders in private sector and public sector as far as financial awareness or financial capability or financial literacy is concerned. I myself was associated with multiple of such efforts in rural areas. So it took us so many years in a wide market, over more than 1.4 billion individuals, personal data. First, I think the first and the foremost, I would not say challenge, but kind of an opportunity for entire business fraternity. I would say private sector should be leading this one, the awareness part of it. I think awareness is much, much, much more important. That is something which I wanted to add. What Rishi and Shalini said, the last level, because we see. I mean, I don't know if I should be saying this in public, but we see a lot of insensitivity for among people as far as their own identity documents or identity biometrics are concerned. So no, they I can't speak here online, but all of us know those things happening. So I think awareness is much, much, much more important. So that piece, and there's a larger role for private sector to generate that awareness. And on finally, I don't know if we have time on innovation, because I just forgot this mentioning earlier, because this innovation and regulation is coming like chicken and egg. But I
Yes.
just want to reiterate here that innovation happens on the borderlines of right and not so right, maybe in the area which is shaded black and white. So anything which becomes determinantal for society in a long run is something which society doesn't accept, and ultimately that becomes a regulation or a law of a land. So
Absolutely.
the fintech firms which are operating in financial services space, probably this is the mantra. No one is going to tell you this is a right innovation, this is a wrong innovation, or this is
Yes.
ethical, this is unethical. So that is why it is innovation, because it is operating in the shade of gray.
So coming back to the again maybe last question, because the time is limited and I want quickly all of you maybe to respond starting from Bhavin, specifically on the innovation part as quick as possible. In fact, when the I have been I must say observing this space fintech quite diligently, and when most of the fintechs focused on the lending part from the payment part, I think the buy now pay later kind of product became very famous. They started even giving loans to the young boy who's going on a date, or a person who wants to buy a cloth for his friend's wedding. And in fact, that's when I also wrote an article, buy now don't pay later. And that's, we can see a lot of action specifically on the digital lending space. But this innovation happened, good, bad, right, wrong, we don't know, happened only because there were no regulations. The pass outs from the IIT, IIM came out and built a product without knowing how the regulators will come into the picture, and that's when the innovation came. But now, when we know that there are 10 tick boxes which have to click, that your innovation will be tested by the regulator. My question to all of you is: will the innovation happen at the same space that used to happen earlier? Bhavin, to begin with you, because you kept quiet for some more time, and then anyone who wants to add on that.
I think we had more technically equipped people to answer that question. So I thought better I don't speak on that data privacy part.
Sure.
Coming on this innovation part, yes, Amol, I feel that at least for some time, we will see little slowdown, at least from the existing players who are operating in the market. Because either they have learned the lessons, or they are learning from others' mistake, or they are mindful about the fact that if they really want to exist in this industry in a longer run, they only want to build big companies. Probably this is the way to move forward. The way you exactly explained that some technical guy coming out of the college or drop out of the engineering college came and built the product without knowing regulations. Probably in future also similar situation will come. But the only difference will be he will be aware about the regulations because that will be a new norm. Earlier, the new norm was not knowing the regulation and building the product.
Right.
Probably that is being changed now. Right. So I do not see in a longer run this will impact. The way I look at it, probably it will help Indian market to grow in a way that there will be less number of accidents. Because if we look at global fintech domain or global fintech market also, then we have certain examples like China, when so many disasters happen and still there is a phenomenal new kind of products coming up in the fintech side. Then we have certain markets like a few European and US market where there are less number of accidents or because venture capital amount is so huge which got invested into those segments, certain accidents never came up or surfaced in the way it gets surfaced in India or China. And then we have little balanced market like India, where our regulator is always a little more want or probably more level playing field creator for the people in the industry. For example, in India, P2P regulations came up in 2017. Industry just started in 2013-14. It was merely 3-4 years time period. In any of the country, they never witnessed P2P lending regulation coming so far. In US till date, there are no clear regulations around the P2P lending. There are different kind of regulations which have to be followed. In UK also, it came after 10, 12 good years. Right. So I would say India operates in a different way, and probably the way our grooming is through our schoolings as well as the guidance we have got, probably we adapt it very fast. So I do not see in a longer run it is going to impact. In a shorter run, definitely yes.
Okay. Sure. I think I wanted to take more views, but I would have stopped here because the time is up. But I think I heard all of you. It was quite meaningful and realistic conversation. Thank you so much for sharing all those thoughts here with us. Thank you so much, Jatinder, Rishi, Shalini, and Bhavin for taking out time on this during the Diwali season and sharing your thoughts. Once again, thank you so much for being part of this conversation and wish you a very, very happy Diwali. Thank you so much.
Yeah.
Thanks.
Thank you
Wish
so
you the
much,
same.
and wish all our viewers also happy Diwali. Happy Diwali to all.
Thank
Thank
you.
you. Thank you.